Joining us now with his analysis of trade at midday is Louis Storm from Vega Capital. Louis, thank you so much for your time today. Perhaps let's start with some economic data we got out of the US yesterday. Retail sales figures surprised to the downside, alluding to a consumer under pressure. Last week's jobs print not painting a great picture, right? We saw job openings falling to a 5-year low and initial job claims ticking higher. Do you expect to see that softening filtering through to today's U.S. non-farm payrolls?
Yeah, thanks for having me. Firstly, yeah, the sales data came out a bit softer than expected. Well, we've kind of been expecting this over the past couple of months. If you take into account what AI spending is doing, it's basically driving all of the GDP growth and all of the investment growth at the moment coming from the US. If you take out the AI spending, the actual growth is actually quite low, as well as AI taking up some of the jobs. So I think there's going to be a short-term lull in job growth, and then we'll probably see it accelerate in a year or two when the initial AI shakedown is done.
So we're likely to see some short-term pressure. Will that then filter through to, I guess, some of the Fed's next decisions? Expectations are for a hold moving forward.
That's definitely, we'll definitely see it filter through. I think it could put some downward pressure on inflation, which is probably welcomed by the Fed because they would like to cut rates.
Yeah.
So that's probably something that they'll look to do anyway. If that doesn't happen, if we see stronger numbers, then we'll see the Fed probably looking to hold interest rates, and that will cause the US dollar to appreciate a bit more during the year. So at the moment, it's quite volatile and it's quite uncertain, but that's kind of the outlook.
Yeah. So volatility, the name of the game, and I'd like us to circle back to what we've been seeing play out in the AI space. Overnight, we saw U.S. financial stocks in focus after a tech platform launched a new AI-powered tax planning tool that promises to do the work within minutes. This, of course, comes after we saw, AI concerns wreaking havoc on software counters just last week. What are you making of the market reaction? Is it over-exaggerated considering that we still don't know what these tools actually do?
I've actually had something very interesting the other day. If like a lot of investors are very scared of AI agents taking over software companies, but they're kind of pummeling both. They're pummeling the AI companies as well as the software companies. So, I mean, one of the two has to come out a winner. But at the moment, it's just like they are thinking it's the end of everything. So I still think the software companies, there's a lot of software names you will really struggle to replicate with the AI agent and with vibe coding. But there are some companies that you could probably, like some firms do have large IT departments, and they could probably vibe code some sort of version of the software that they are using at the moment. But there's definitely some names that won't feel any of the loss of demand.
Yeah.
Just with some of the results, like a ServiceNow, for example, Microsoft, exceptional results.
All right. So are these concerns valid?
Again, these concerns are valid up to some point. The financial services industry, it's very sticky, and barriers to entry is very, very hard. So I can see some places AI coding or vibe coding could create problems, but the bulk of the sector, I'm not sure it'll make a massive difference. It'll probably help the financial services industry more than it'll actually.
All right, let's move over to Ferrari. Demand for Ferrari cars remain solid, and that boosting fourth quarter earnings. Your read on the numbers, markets seem to like those earnings. The last time I checked, they were up 8%.
Yeah, again, Ferrari printing really good numbers. They've been under pressure the last year, and again, coming out with great earnings. The number of cars produced actually stayed pretty much on similar levels. But the increase in prices meant that revenue increased by around 8%. and earnings also increased double digits. So we are very positive on Ferrari, just showing the moat of the company, the competitive advantage of the company. Although it's been under some pressure, the share price made a nice return over the last day or two.
All right, let's get your stock pick then. Where are you seeing value at the moment?
Palo Alto is one of our names at VC Value at the moment. It's a software, it falls into that software category, but it's actually cybersecurity software. So, I mean, cybersecurity is probably one of the biggest spending items next to AI, just due to the amount of data that's lying in data centers and in the cloud. So you would need very, very good cybersecurity software. I'm not sure vibe coding or getting your own software is going to take any business away from them. It's a very high risk thing to try and do yourself. So we see very good growth and very positive, especially with the share price coming under pressure. We see this as a buying opportunity.
All right, let's leave it there. Louis, thank you so much for your time and taking us through trade at midday. That was Louis Storm from Vega Capital.